Hey everybody, this is Jose here. How are you all? We are about to get started, and as a quick sound check, it would be great if you could type yes or sound okay, something like that, just so I know that you hear me well, and therefore we are ready to start, okay? 7 seconds for us to begin. So, yeah, perfect, wonderful. Wonderful. So guys, let's begin our session. I'm gonna, as always, maximize our introduction slide, our welcoming slide if you wish. So we start the day, with the right focus, okay? But we're gonna jump into the charts quickly and efficiently, okay? Nice to see you all, my friends. Very nice to see you all. Yeah, very good, perfect. Okay, so guys, time to get started. Today it's 30th of May 2019. My name is Jose Blasco. I'll be your guide, and today we are getting together for longer term purposes. Okay, let's talk about this just for a little bit. Okay, because notice that the term here is not long term. The term is longer term. What does that mean? Well, that basically means anything that is above and beyond intraday. Okay. Intraday means that you are executing trades that last less than 1 day. It could be 10 minutes, it could be 10 hours, but it's less than 1 day, where longer term is anything above that. Okay, so it could be a 4-day trade, it could be a 4-week trade, it could be a 2-month trade, it could be anything. Okay, so in most of the sessions that we've been running with longer term, we are using options. Okay, and we've been getting organized in ways where we are using our scan tool, and pretty efficiently we end up with a list of stocks to be traded with options for either directional or non-directional trading or even neutral trading. Okay, and that's what we do. Okay, but just be ready, because we'll be adding more markets and more possibilities in our longer term sessions. Especially after 2 weeks from now, we will be covering over the weekend in our sharpening session. We'll be covering longer term trading. And we're going to be able to be way more precise with the directional trades that we are going to execute with stocks. And then we'll execute those trades with or without options with a much greater level of precision, like we have been doing with Forex or futures. We'll do the same for the stocks and also the ETFs. Okay, so it'll be great because it's going to help us take the longer term sessions to the next level. Okay, and then after that, we will also have to get deeper into options, and I would like to introduce you to tools to make your life even simpler, because now when we build options trades together, so we follow a method, we follow a process, we follow certain rules, which is perfect, nothing wrong with that, but at the same time, technology is our ally, isn't it? And there are ways to speed up the process on how to build an options trade, and basically in the end reach more efficiency, spend less time trading and make more money with the time you spend. Okay, and that's the ultimate goal: efficiency, quality, probability, managing the risk, all those things. Okay, so we have room to grow. Okay, and I'm very excited to take the longer term sessions to the next level, like we have done with the shorter term sessions, where some of you are reporting very nice results and a very good application of the methodology. Where we're gonna do the same with longer term, taking it to the next level. Of course, it takes a little bit of time, and since we only meet over the weekend to do sharpening, so it takes some time to go over all the material, but that's the direction. Okay, so I wanted to give you a heads up as we start the session, so you understand where we are at, okay, and where we are going, and so on. Okay, that way as well, if you have any suggestion or you have any questions, okay, it would be great that you send them to us. So before we conduct those future sessions that we'll do in over the weekend as sharpening, we can certainly take all of this into consideration, guys, because we're here to help, isn't it? The UFOs are our ally, but in the end, who clicks the button is us, right? So we need to take ourselves, okay, to the next level from a knowledge point of view, from a skill point of view, from a discipline point of view, from a trading psychology point of view, and that's why we work together as a team, okay? And that's what I love about getting together, okay? Anyway, before we start, disclaimer: the following videos, clips, and demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Good. So we got the intro. We are all now focused on what we're going to be doing. Here is TradeStation. I also have, apart from TradeStation, I have ready TradingView. So I have, when it comes to charting tools, analytical tools, and trading tools, I got my TradeStation and my TradingView ready. When it comes to other type of market data, I also have briefing.com ready, which is a website where you need to be registered in the website to be able to get access to earnings data. We use this website for earnings data, but it's free. Even though you have to register, there is nothing to pay. Okay, so in my case, I already got my username. So if you're not a subscriber, you can click here on register. Okay, and I received a couple of emails with these questions, so I just want to show you so you get to see it. So you click in, register. Okay, notice that there is a tab there, and briefing.com is free. You just type your name, password, email address, click registered, and magic, now you have a username. So the moment you have a username, you can now log in briefing.com, and when you click on the search button on the right, okay, now it will allow you to type ticker symbols, okay, and throughout the years, this website has proven to be very reliable, at least to me, when it comes to earnings data, and it's the one I'm going to use in the sessions. Okay, so if you want to mimic what I do and you are not using briefing.com, you could certainly do that. Okay, so those are the tools that we have. And again, as we start the session, quick reminder: we are running our scan here, which I did run before the session started, so we don't have waiting time. The scan is giving us five types of opportunities, which really are belong to, let's call it, two groups. We have the group of directional trading on the top, okay, directional long and short. We have the group of non-directional trading in the bottom. Okay, now when it comes to non-directional trading, you can be purely non-directional, which is what we call non-directional, or you could be slightly directional while you are non-directional, and that's what we call neutral. Okay, so we have neutral long, neutral short, and non-directional, and then we have directional long and directional short. Okay, and also the other thing that probably you remember, but just in case, is that the directional trades are executed using debit strategies. So we are buying options. Therefore, we are always targeting, the scanner is targeting options that are of a very low cost, options that are underpriced because you purchase, so you want to buy and pay little. But when we do non-directional, those three types of strategies, neutral long, neutral short, and non-directional, the three of them produce credits, meaning that you're going to be selling options, meaning that you want to use options that are of a high value. Okay, overpriced options are ideal to do this. Okay, so the scanner is also taking care of that. So having done this quick summary, I'm going to start looking at charts. As you also know, in 23 minutes from now, the US market will open. The moment the market opens, what's going to happen, actually 10 minutes before the market opens, our Option Station Pro, it's going to get reset. Okay, so what I would like to do from now until the market hours is to basically work on the charts and the UFOs to identify if we do have or we don't have potential trade setups that meet our rules and gives us advantages and probability. And if that's the case, we'll make a note of those symbols. So the moment the market opens at 9:30 a.m. Eastern time, the option chain will upload and update, and therefore we'll be able to plan the options play and be ready to execute. Okay, in other words, be ready to join me on those trades starting 9:30. Okay, 20 minutes from now. Let me take a look at those comments on the comments box in case I'm missing something. Yeah, Orlando made another 340 with the crude oil. I love it. Yeah, Alfredo, today we are focusing on options. Okay, we are focusing on options. If we have time, I'd like to take a look at the Forex markets too for the long term. But most cases, 1 hour is a little short, so we'll see how far we can go. Okay. So let's begin with directional long. Okay, so directional long, these are going to be opportunities to buy stocks. Okay, where you could buy stocks, or you could instead of buying stocks, you could plan the trade with options, which is what we're going to do. And here we got American Express. Okay, beautiful uptrend. A little concern is that price is a little close to the red UFO. Okay, so again, not too concerned in the sense that in an uptrend, typically the sell on field orders will be cancelled and buy on field orders will be added. So this red UFO is not a major concern, but I would rather have it not to be there. Okay, so what I'm gonna do is keep going through other symbols like Colgate Palmolive to see if that's the case. So for example, with Colgate Palmolive, we have nothing red. That's very good. My concern with CL is that the next green UFO, it's happening all the way at 66. So if this market starts falling, there is a lot of room to fall before it turns around. And by the way, we also need to keep in mind another chart. Okay, we'll talk more about that when we do long term. But another chart that we need to keep in mind at all times is the chart of the S&P. Because stocks, you have heard me say that before, stocks is a fragile instrument. Okay. Even the S&P, which is made of the 500 stocks, which are the greatest stocks in the US, happens to be small compared to futures or Forex. So imagine if instead of trading the whole S&P, which is 3 times less compared to futures, when it comes to size, imagine if you only trade one stock. So how tiny is that? Okay, and when I say tiny, again, of course, certain stocks are major stocks, but at the same time, if you were to compare them with, for example, the crude oil futures or the 30-year bond futures markets, those stocks happen to be very small, okay? And therefore, that's why I said they are fragile. So a stock such as American Express or Disney or Colgate Palmolive may have a green UFO, and that green UFO may end up not working because the whole S&P is now in a downtrend, okay? And we may have a problem because the S&P is moving down and therefore is dragging most of the stocks down. Okay, so we need to also be sensitive to that fact. Okay, so since we don't have green UFOs anywhere close with the S&P, and CL is not giving us any green UFO anywhere close either. Well, the good news was that we don't have red UFOs, but at the same time, we don't have anything to kind of defend ourselves. So if the S&P keeps falling and that particular stock CL doesn't have anything to kind of at least stop falling and bounce a little or something like that, we can see that stock drop against us very quickly, 5-10%, whatever, and that would be a very disappointing trade. Okay, so I'm gonna keep going through the list, looking for market setups where hopefully I can find green UFOs close by and red UFOs far away. Where with Disney, you can see we got a red UFO very close and nothing at all the way to 115. So it would be a little bit of a suicide to enter this trade, given the fact that we got nothing to really support the trade. And on top of that, the S&P is in a downtrend. Okay, so we need to be careful. So what about McDonald's? Okay, McDonald's looks a little better in the sense that the green UFOs are a little closer and we got nothing red. Okay, so we are a little bit in a better position. And by the way, one more comment I want to make as well, because some of you may be thinking, okay, wait a minute, Jose. If you tell me that the S&P is in a downtrend and it's going to tend to drag all the stocks down, so should we even get long? Should we even consider going long at all, right? And again, if you were to trade one stock at a time, well, the answer is that probably not. You will want to trade in the direction of the stock, which is also the direction of the equity index markets. That would give you more odds. But at the same time, normally, if you trade stocks for the long term, and this applies to ETFs as well, typically what would happen is that what you build is you construct a portfolio where you will be running multiple trades together at the same time. And as a hedging technique, which we will need to talk about hedging and how much you want to hedge and in which direction and so on, well, we will also need to come up with a portfolio where we are always running some long positions and some short positions at the same time. So let's say, for example, the best trade today is to get short, but your portfolio needs to add some long, okay? What we technically call some positive deltas. So what if you need positive deltas in your portfolio? Then you would look for a long, like I'm doing, and in order to mitigate the risk of being totally killed by the market falling hard, okay, you would want to look for market setups such as McDonald's, okay? We'll see if we can find something better than McDonald's, but that would be what I'm looking for, where we have green, closer than the prior cases we saw with American Express, Colgate Palmolive or Disney, and also we have no red. So if in the end the whole broad market was to turn around because the big market players, the big investment banks, the big hedge fund managers come in back long, adding many on-field orders, and the current downtrend in the market, okay, it turns around and goes back to become an uptrend, and is a long-lasting uptrend. Guess what? You benefited from a fantastic trade with this market in the sense that you got nothing red. But if the market was to fall, okay, well, those green UFOs are likely not to stop the fall, but to slow it down. So if the green UFOs slow down the fall, well, then McDonald's may only lose 2% when the S&P maybe has lost 10%. Okay, so you are profiting on your short positions while the long positions are not losing as much. Why? Because you have green UFOs close by. Is that making sense? So again, just sharing a little bit of insight on how to be able to do this. And Dirk, I'm reading your comment about delta neutral. Okay, so delta neutral is not ideal. Okay, it's not ideal. I mean, you can be delta neutral and positive gamma, and you can still make money. Because gamma will change delta, but at the same time it's not ideal, because really you are removing almost the whole risk of the trade. And in trading, we know this very well, isn't it? No risk equals no reward. So basically, if you end up being delta neutral, you'll have to do many adjustments to remain delta neutral. You end up paying a lot of fees to your brokers, and when the market moves, yeah, gamma will pay you, but at the beginning gamma will not pay you at a very accelerated rate, and therefore it may end up being a little disappointing. Okay, so we'll talk about ways on how to understand what type of hedging you need to have in a portfolio when you manage multiple positions at the same time. Okay. Yes, good eye, Mario. I am using calibration 0618. Okay, and this is some time ago we conducted a calibration session in the sharpening during the weekend. If you look at it in the playlist, you will see it as sharpening calibration. So in that session, we talked for 2.5 hours about calibration, and I ended up sharing the value that I use, which is 61.8. Okay, so that's the one I'm using since then. Okay, but you could certainly, as we discussed in that session, use your own, even use 0.5. I mean, the fact is that no matter the calibration is fine. Even though different calibration parameters will produce different outcomes, and you know what we covered that day is that in the end it depends on your trading profile, your trading style. Okay, so if you have not watched that session, Mario, I would recommend you to watch it so you will understand the rationale behind 61.8. Okay, and it doesn't mean that's the one you have to use. Okay. So MDLZ, we have a setup where, yes, we have some green below, but then we also have some red. Okay, so for now, my favorite would be McDonald's, MET, MedLife. So let's see what we have. MedLife, this one I'm going to say is going to be my favorite because we have nothing at all above, and we are very close to the green UFOs. Actually, this particular stock is about to open 0.70% down, opening at 47.01, which probably means that that particular stock is going to open within the UFOs. Okay, so MedLife and McDonald's will be the two trades it seems that I'm going to be looking at, especially MedLife. PepsiCo. So with PepsiCo, great, we have the green UFO, but we also have the red close by, so we'll pass on that. And XLP, I'll pass on it as well because it's an ETF. Okay, so when it comes to directional longs, okay, I shared a little bit of insights, thoughts in the back of my mind when I'm looking at what the market is giving me today. Okay, and always thanking the market. Thank you, market, for giving me that, because you didn't have to, so thank you for that. And McDonald's and MedLife, we said, are going to be the two selected stocks. So later on, I will come back to those charts when the market opens, and therefore the option chain begins updating. Okay. Now, on to the short side, we only got one result, okay, which is Target. Okay, and Target, when you look at it, I mean, maybe in the lower time frames, we have something. Okay, and if we do have something in the lower time frames, I'd be okay to plan a trade on Target. Again, when I say I'll be okay, it has to meet my rules, and it also have, again, we'll talk about this when we talk about portfolio management, but if your portfolio require a short trade, that's when you look to plan a short trade. Is that making sense? So if you need a short trade in your portfolio, Target does not have red UFOs in the daily time frame, but you can see there is a collection of red UFOs in the 60-minute time frame. Probability 62.85. using regular session data with pre and post market. We got 56. Okay, nice probability. Normally stocks don't give so much high probability. And we got a red UFO right here at 82. Okay, so I mean 82, 83, it's quite far from 79.82, which is the current price. So it's not like it's too close, but at the same time, you know, you have UFOs in multiple places in the 60-minute time frame, both in regular time and regular trading hours, and also pre and post market. And the good news, if you needed a short, is that there is room to fall all the way to, let's call it 73 or something like that. Okay, so we have room for an okay trade. Okay, so we'll look at target as well when it comes to planning on a short later on. Okay, so what else do we have? Okay, yeah, Royce, if you missed how to set up the scan in the get together sessions, again, going back to our YouTube channel, maybe it's better if I show you. So if you open a browser, get into the YouTube channel, okay, which is youtube.com/c/tradewithufos. Okay, and by the way, since we're here, if you haven't subscribed and you haven't clicked on the bell, please, this is your time to click subscribe and click on the bell. And below we have the playlist. Okay, so when you click on the playlist, the get together session playlist, okay, you have those sharpening sessions here, right? And if you scroll down, earlier in the year, actually it was beginning of the year, we did 7 sessions on options. Option 7, option 6, option 5. Okay, so if you have not attended those sessions, I would strongly recommend you to attend them. Okay, and within that content, okay, that's where I did explain how to set up the scanner. But to make it simpler for you, Rose, and for everybody, what we also said is that if you ever need the scan file, you can just send an email to us, which is reach@tradewithufos.com, and when you send an email to us requiring the scans, we'll send you a file that you can then go back to your TradeStation, click on backup restore that file, so you will restore that archive that we'll send you, and magic, the same scan I have would appear in your computer without having to set it up manually. Okay, so I recommend you to do that to avoid errors. At the same time, I recommend you to watch those sessions so you know what the scan does. Okay, good. FB, why pass on the ETF? Well, because you know, when being directional, you know, especially if you're building a portfolio with multiple positions at the same time, well, then you want those stocks to move, because you want them to move so you profit more. ETFs, I'm not saying that they don't move, but certainly the speed of movement of the ETFs is always much less. Okay, so ETFs normally are markets or products to be used as a pretty passive type of investor, because you have diversification built in, because you may have a few hundred stocks within the ETF. So you have, it's not like one stock goes bankrupt and you lost money, right? Because you have many stocks that make up for the ETF. But from a point of view of speed of movement, okay, it's actually a little bit of a, you know, I don't want to use too strong words, but a little bit boring as an asset, if you don't mind me to phrase it this way. And from a risk point of view, it doesn't matter to us because we're using options. So if I buy options on McDonald's and let's say McDonald's goes bankrupt, well, yeah, that's a bad news, but what's the most I can lose? The most I can lose is what I pay for the option, which is much less than what the stock is worth. So I do have risk management built in, even if something crazy like that happens. Is that making sense? So that's why I suggested to pass on the ETF, okay? You could certainly, if you are an ETF fan or you like to have a portfolio made of ETFs, okay? And you know, again, nothing wrong with that, absolutely not, especially if you don't use options. Okay, so you know, you can certainly take a look, okay, and apply the same mechanics that I will apply for the stocks. Good question. What else do we have? Jose, I have another red UFO with target at 81 in the regular session. Okay, so let's do this. I'll check that there as I go back to target. I'll check that. Okay. In the 60-minute time frame. Okay, got it. So now, what else do we have? Okay, we have neutral long and neutral shorts. Okay, so notice that the very same outcome is appearing here. I got very few shorts, many more long, just like with directional. very few shorts, many more long. Same story. Why? Because of the trend in the market that is being established now as a downtrend. Okay, and if the market is pushing down, down, down. Okay, remember. Let me switch back to the S&P. So if the S&P is now in a downtrend, right? It's going down. It's going down. So is this the right time for you to short? Is that the right time for you to get into short trades? No. The right time is to wait for the market to come back, and now is the time to short, okay, when it gets to the red UFO. So, since the market is in this position, okay, the scanner is giving us very few shorting opportunities. Why? Because we are not in the right place for shorting. Is that making sense? Once the market goes back up, well, then the scanner will give us more shorting opportunities and less long. Okay, so that's the beauty of using the scanner. It saves you a lot of time as well. Okay, so now in here, we are now dealing with a different scenario where we have markets where the options are marked as highly priced. Okay, and again, the way the scanner does it is looking at the 50 highly priced options in the market, given a collection of additional parameters, okay, such as the trend, etc., as you know. So now sometimes, okay, and I want to point at this because it's interesting. Sometimes you will have stocks such as Disney that show on neutral long to do a credit. So the scanner is calling the options on Disney to be overpriced. But notice how we also had Disney right there in long for directional trading, which means you're going to do debits, which means you're going to be buying options, which means the scanner has identified the options in Disney to be a low price. Okay, and what does that mean really? Well, that means that probably the options on Disney are not too high, not too low. They are somewhere in between, but when filtering for all those parameters, basically they still fall within that 50 above or 50 below. Okay, and when options are, let's call it fairly priced, it's okay. It gives you a little bit less of an advantage, but it's still okay to take the trades. Okay, so whenever you see the same symbol in different places in the scan, it's not a glitch, it's not a problem. It's just that it's just where the price of the options is, which is kind of like in the middle, not overpriced, not underpriced. Let's call it fairly priced. And next thing the scanner will put it in both places. Okay, based on the other parameters as well. Okay. Yeah. Okay. Got it. So yeah, I'll take a look at that other UFO and see why that may be. Okay. I am looking at the last date. Yes. Yeah. So I'll look at that as the market opens in 3 minutes. Okay. So neutral short. Okay. Neutral short and neutral long, and also non-directional. Here, what I'm going to do is also I'm going to be a little more picky with directional. I'm okay normally to go over most of the symbols, but with non-directional or neutral, you have seen me many times be more selective within the list of symbols. Okay. Why? Because some of those options may not be as liquid as we want. And they may be okay or okay at times, maybe when earnings approach, but not always okay. Okay, and therefore, out of experience, which that is developed through practice, that's no other way, and there is no mystery there. Okay, so out of experience, I know some of those stocks, for example, Facebook, super liquid options. Okay, amazingly liquid options, where MDLZ, well, really so. Okay, so yeah, so. We need to keep all of this, in mind. Okay, so what do we have with Facebook? Well, with Facebook, we are inside of a red UFO, okay, and this is an opportunity to go long. I don't think it's a good idea to go long in the middle of a red UFO, okay. So we'll pass on that one. Costco, let's see what happens with Costco. So that one could be okay. That one could be okay. I'll look at it later better in the sense that we are kind of in the middle of nowhere, so anything could be okay. So we'll look at Costco later. We may have Costco, by the way. Yeah, we have Costco as well as a non-directional. So, probably I'll be happy to look at Costco from a non-directional point of view. Let me also check. We always do that, and that's why earlier I talked about briefing.com. Okay, let me also check. the earnings date for Costco. So I just typed Costco, okay, and it's just loading here. So the date is May 30. Okay, yeah. So that's today. So it's not gonna work. CRM could be another good one. Okay. CRM. June 4. Okay, June 4. So that's not gonna work. Not gonna work because next Friday is June 7. Okay, so we need expiration dates beyond June 7. As we have covered before. Okay, CVS could be a valid one. Let me see CVS. That would be August 8. Okay, May 1st was the last time when earnings were reported. So CVS is a market that we will look at for non-directional. What else do we have here that could be nicely liquid? Lulu could be okay. So let me check Lulu. This is something I don't understand about this website. June 12th, okay, so Lulu is fine. We'll look at Lulu later. Notice how, even though the scanner is calling Lulu a market with no specific trending condition, you can see a very, very, very strong push here, okay, but based on the scanning parameters, okay, you know, that market is not fully trending yet, okay, so really, of course, it's very concerning to have this open space there with the open gap, okay, very concerned, so it may not qualify later when we look at the 60-minute time frame, okay. Meditronic, MDT, so MDT, and the market opened already, by the way, so we're gonna start looking at these opportunities. Yeah, August 20, so MDT may be a valid candidate, and yeah, we got red, we got green. We look at the 60-minute time frame as well later, so we can use shorter time frames and shorter expiration dates as well. And I will also look at Merck, MRK. So MRK, let's see if the earnings reports are after June 7, and that's July 30. So MRK should be or could be also a valid candidate. Okay, so okay, let's do it. Let's begin with CVS. That was the first one we were going to use. Okay, so let's go for CVS. So CVS is giving us many red UFOs, but no green UFOs unless we load a lot of market data. Okay, so yeah, not too happy about these guys. Okay, so we're gonna pass on CVS. That was a quick one. With Lulu, I shared my concern before. There is an open gap right below price. So let's go ahead and take a look at you know, that particular open gap, because that particular open gap may have UFOs in pre and post market session. So even though in the daily time frame, okay, let me go show you that again. In the daily time frame, you can see, you know, this open gap right here. The fact is that, you know, this may be empty space, or during the pre and post market session, we may have some UFO here, okay? And if that was the case, you know, so you have on-field orders below price, you have on-field orders above price, and maybe we can plan on another. Oh, I went too far with my drawing. What I meant to say is we can plan on a non-directional trade. Okay. So now going back to 60 to see pre and post market data. So what do we have? Yes, we seem to have UFOs. Unfortunately, very far down at 145. Yeah, and probability is 54. If I was to use that, if I was to look at regular session, it would be 57, which means that the UFOs during regular session hours are more powerful to Lulu. And again, we have you know, those green UFOs all the way to 145. Okay, so you know, if we were to plan on this trade, certainly we need to be working with this particular setup. Okay, and again, let me check, because we may have a trade here. So let me check again. I forgot what was the earnings report date for Lulu. So I think it was August, right? No, June 12th. Oh, yes. So June 12th. Okay. only allow us to use June 7 because June 7 will be next Friday, and then 7 days more will bring us to June 14. So we're gonna have to be using June 7 because we don't want the expiration date, as you know, to be after earnings, which is June 12. Okay, so good news, we are quite close to the earnings report. We know that as the earnings reports approach, the value of the options go up. Okay, we are 12 days or 13 days away from the report. So we may have premium enough. I would guess it's gonna be very tight, but it's always worth it to check, because if we were to have premium enough and this range, okay, from 178 all the way to 143, which is a humongous range where the current price is more or less in the middle, right? So if we were to plan a non-directional trade expecting Lulu to remain in this range, well, I'm not sure we're gonna get paid enough to be able to execute a trade based on our rules, because the range is humongous, okay? And we are only allowed to use June 7, okay? So I'm not sure we'll be able to do it, but as I was saying, it's always worth it to check, because there will be times where market participants that trade Lulu will believe the world is ending, and they will be buying those options in a desperate fashion after this drop and the open gap and all of this. And next thing you know, that day you do have enough premium. Okay, so it's always worth it to check. Okay, and if it does work, that trade now becomes extremely high probability. Okay, so what do we have here? If I was to sell the 143s or 142s, how much would I get paid? Okay, well, I don't have 142s and 143s. Okay, so unfortunately, unfortunately, I am a little stuck. And even if I was to use the 145, I get paid very, very little. Okay, so again, it would have been amazing to be able to do it with the next expiration date, because here, look at that, we got $300 of premium just because of one more week. Okay, why? Because the earnings are built in. Okay, you can see that here as well, by the way. With this 72%, okay, that's the implied volatility for that month, okay, for that week, 72%, where the prior one is 42, okay, so the options are not as close as overpriced in that particular week. But sometimes it's not like that. Sometimes it's the opposite. Okay, so that's why, even though we didn't, we will not call this a trade, and we spent a little bit of time here doing this, I wanted to talk about it because sometimes you will find a premium, and basically it's almost like free money. I mean, there is never free money, okay? But when the range is so wide, I mean, your probability is really in your favor, okay? So what do we have? We have Medtronic, okay? With Medtronic, we talked about, that's the one that I believe was August, MDT. So planning on non-directional trading. Hey, Bojan, fantastic. Fantastic, guys. Fantastic. So, yes, August 20. So, with MDT, we can really do many things. So what I would like to find out about MDT is more about the UFO performance stats. Compare those performance stats with regular and pre and post market. Where regular is giving me, as you can see, 55.92. If I switch to pre and post market, it's giving me 48, which tells me that in the case of MDT, pre and post market UFOs, okay, are not going to help us, in the sense that those institutions seem to be canceling those orders. Okay, so it's not really going to help us. Okay, so what I'm going to do is I'm going to look at the regular trading hours, okay, UFOs, okay, and if I was to measure the distance from the current price to this red UFO, and I was to project this to the bottom part, notice how I am more or less kind of halfway, okay, between the upper value of 96.93 and the bottom value below the green UFOs of blue value 87.36. Okay, so we have a potential opportunity for MDT to stay in a range, because when it gets to this UFO, it's likely going to bounce down and spend time. When it gets to this, bounce up, maybe it comes to this, then bounce down, and all this time where that stock will be bouncing up and down, it's time decay for the options that we would sell if we get paid enough. So the question is, how much I get paid, okay, if I use MDT. Okay, I need to relaunch the chain. So how much I get paid if I use MDT and I sell the 97 calls. Okay, how much I will get paid for the 97 calls? How much I will get paid for the 87 calls? Okay, that's the question. Okay, so we're gonna see that in just a minute. I got the option chain loading here, and I'm just gonna input now MDT. We have it. Okay, and again we'll start with a short expiration date. So what if we do 97s? Okay, so 97s will pay you 9 cents on June 7. What if we do 14? So the 97s will pay you 18. Not enough. What if we do June 21st? So the 97.5 will pay you 29. The minimum rule that we have, you probably remember that, is we want to collect 35 is better, but 25 is the real minimum. In this case, we may get 29. I'm not too excited, but you know what? If the 87 pays me okay, that one is 46. The two together, the 87 and the 97 may be enough. Okay, so let's plan for it and we'll see if we have a trade or we don't. So the idea here would be to construct a pure non-directional trade. We will do that by building an iron condor. That will be done by purchasing, okay, by the 98 call, and we are gonna be selling the 97 call, as we said. This is gonna be done using June 21st, 2019 expiration date. And on the put side, which is below the green UFOs, we're gonna be selling the 87 put, and then we would be buying the 86. Okay, that would be my initial plan for the trade, to be adjusted and to be again, we need to double check all the parameters to make sure it's all good. Okay, but that will be the plan. Okay, and again, this is 4 options. Okay, but this is one trade. Okay, so don't get confused by that. This is not 2 options trade. This is 1 options trade. Okay, it's called an iron condor. What do we have here? So 97, 98. Okay, well, it's 97.5 and 100. Okay, so we don't have 97 and 98. Okay, so I'm gonna have to rectify that. 97.5 and 100. Therefore, I'm gonna have $250 of risk in this trade, which is the distance between strikes. 2.5 times 100. It's $250 of risk in the trade. If I was to look at the 87s, okay. So you know what I'm gonna do, just to make it equal, I'm just gonna go for 87.5, which is okay because really this line is 87.36. Okay, so 87.5, it's basically the nearest figure, right? And then I'm gonna go for 85, and that way I got $250 of risk below, $250 of risk above. Okay, so that's gonna be the trade. So let me right click, analyze and sell an iron condor. We're using June. On the put side, we just said we're gonna be using 85 and 87.5. Okay, that's the put side. On the call side, we said we were going to use 100 and 97.5. Okay, so what is this going to do for us? Well, this is going to provide $39, okay, of premium. Okay, but before I get excited or not, I want to also make sure that my condor is more or less well balanced. So for that, I am typing the values from the upper range, which is 93, 90, 96, 93. Okay, so 96, 93. Here we go. And the bottom part is 86.30, 87.36. Okay, so we have it here. Okay, and yes, okay, so what I wanted to see, I wanted to be looking at those 2 values, and look at those two values and confirm that those two values are more or less equivalent, okay? And also, when it comes to equivalency, the best way is normally to have the bottom value to be a little less painful compared to the upper value, okay? And that's exactly what I have. So if the market drops, the condor will start losing money at a faster pace to the upside than to the downside. That's what we have, okay? This trade would be planned to be used with no stops, okay? We will learn to trade iron condors in what I once called damage control mode, okay? And we will do that, okay? We will be able to use option strategies against the condor to mitigate the problem in case the market does not remain in a sideways mode, trading within the UFOs, but starts trading and gets us in trouble, okay? So we'll talk about how to do that, but right now my proposal to you would be just to go ahead and use this condor and just forget about it until June 21st. And if on June 21st the price of the stock is between 87 and 97, then you would make $39 per condor, and if it surpasses, okay, then you would lose, okay, which the risk of the trade would be, as we said, $250, okay, which is the distance between strikes, okay? But also, for you to have that risk, you get paid 38. So really, the real risk of the trade is not 250, is 212, okay? Now, this trade has a low reward to risk ratio, which is classical in non-directional trades, okay? But this trade also has a great probability of profit, and it's all about finding balance. And then when we add later in time the management of the condors, then basically what we'll do is that we'll take this 212 and we'll make it such a smaller number, where when you're wrong you lose way less, or actually when you're wrong you make some money, okay? So we'll talk about that. This is what I mean by damage control, okay? Right now I'm just talking about building the condor, okay? So building the condor needs to also meet certain rules, and the rules that we have is that we want to look at what is the maximum risk, and we want to make sure that 15% of the maximum risk is the amount of premium we collect, at least that amount, okay? So how much is the risk, okay? Well, the risk in this case is the distance between strikes, 250, and how much is 15% of that? Well, is 37.5. 37.5 is the minimum that we would want to collect to be able to execute the condor. And how much are we getting paid? We are getting paid 37, okay? So we are borderline with accepting the trade. Actually, a couple of minutes ago, it was showing us 39, okay? So this trade, given the fact that the bid is 55, the ask is 18, I mean, you could certainly shave the price of that spread. And now, if I was you, I would take this trade, and maybe you can go ahead and when you place your order here next to limit, where you can set the price, I would just go for, let's call it 40. Okay, give yourself a little bit of wiggle room, so you also absorb a little bit of the cost of transaction, the commissions, and you are in the trade. Okay, and that would be a valid way on how to do it. Okay, since on my side, as I conduct the session, I am using a simulated account, as you can see here. Okay, you probably know TradeStation does not execute options orders in a simulated account unless you use a market order type. Okay, so what I'm going to do is I just switch it to market so I can place the order, but it doesn't mean you want to do it like that. In your case, you want to use a limit order, as I did before. Okay, so the order has been placed. Okay, and as you can see below, I am currently partially filled. Okay, and now I am filled. Okay, so that's it. I have the condor running in my account. Okay, so we have a trade here, my friends, with MDT. That was a non-directional trade. Okay, so let me take a look at your questions. Here we go. Okay, everything seems to be okay. It seems that Lisa had a little interruption on the sound. Could you guys please confirm, everybody, just a quick sound check, that everything is good with the sound? Yes, very good question, Mario. So the margin requirements for the options, okay, is very easy to calculate. Basically, the margin requirement for the Iron Condor is equal to the maximum risk. Okay, so what is the maximum risk? 212. So what is the margin requirement? 212. That's it. It's that simple. Okay. Good. Next one. We have another non-directional trade to potentially plan with Merck. So let's take a look at Merck. With Merck, in the 60-minute time frame, we got 54 with regular session. What about pre and post market? We have 48. Okay, so hey, we're gonna pass on Merck because if you look at the regular trading hours, which is the one to use because of a higher probability, notice how the green UFOs are very, very far away, and price is not near to the midpoint. And I mean, it's not like you cannot do it, but probably the trade, will not result successful from a risk or reward point of view. A minute ago I just calculated that 15% calculation, right? So I'm pretty positive that Merck trade will not pass. Okay, got it. So anyway, so let's go back to our directional trades. We said we will look at McDonald's. Okay, we will look at McDonald's. So McDonald's up by 0.33% today. McDonald's got 52.90% probability with regular session hours. With pre and post market, we got 55.6 versus 52. Okay, so notice that with McDonald's, actually the orders that the big players that trade McDonald's, the orders that they place in that pre-market or post-market session are actually quite relevant. Okay, so we're gonna use that one for this trade. Okay, and by looking at that, okay, we can certainly see that entering around this price level, around 193, would make a lot of sense. Okay, if I was to look at the daily time frame, do we have any green UFO? Yeah, so look, we have green UFOs in the 60 and they are lining up with green UFOs in the daily. So this is certainly a valid opportunity for us to plan on a long trade on McDonald's. Okay, McDonald's is making all-time high, and now you probably remember a few weeks ago, I think it was 2 weeks ago, we had a trade on Starbucks where I entered the trade, and this trade at the moment is not working in our direction, by the way, but I mean, we still have time until the expiration date. And you may remember out of that trade that I was proposing an entry once price breaks the red UFO, because once the red UFO is taken out, basically that is telling you that the unfilled orders were taken away, they were canceled, and therefore probably you got unfilled orders to be added to the market. And sometimes price leaves a green UFO and never came back, right? And when a market makes all-time high, many times that's the type of price behavior that we get to see. Okay, so that day on Starbucks, I suggested that particular action. It didn't work well because, again, everything was looking good on Starbucks, but the S&P went down. And remember, we talked about that before. Equity index markets drag stocks with them. So because the S&P went down, Starbucks too. Okay, but as the S&P goes back up, then Starbucks is likely to then start making all-time high, and if that's the case, we'll profit from the trade. Okay, which is part of the plan. So anyway, in the case of McDonald's, okay, I'm talking about the Starbucks trades because the difference between the Starbucks trades and McDonald's is that with McDonald's we don't have a red UFO. So with McDonald's, if you were to take this trade, I would certainly advise you to wait for McDonald's to drop to 193 and then execute. Okay, because remember, having a red UFO being traded through is a piece of evidence that tells you the unfilled orders have been canceled, which is the sign of an uptrend. Okay, but in this case, you don't have the red UFO. So if you were to take the trade, just because, let's say, for example, you look at this pivot high that all markets analysts in the world are looking at, and the moment McDonald's surpasses that level, you were to now purchase, well, I would call this a mistake. Why? Because you are buying at the same price, if you wish, where everybody's buying, which is above the pivot high. and that probably is not going to work too well because it's what everybody does. But on top of that, you are not buying with the unfilled orders on your side. You are buying with the hope on your side, which is, okay, it went above the pivot high. Hopefully it'll keep going, right? So we don't want to trade based on hope. We want to trade based on evidence, okay? And the other day, even though the trade didn't work, many other times it will. And last time we had a way to have some evidence, which was the UFO, the red UFO. But this time we don't, okay? So again, long explanation, even though I believe it's important. And therefore, again, the instruction is clear. For you to enter this trade with McDonald's, you would have an entry point. Okay, so we're gonna have to talk about targets. Okay, targets. We're gonna have to talk about the entry point, which this one is gonna be 193. Okay, and then when it comes to stops, okay, remember, no stops. Okay, we are just gonna rely on the UFOs, knowing that the most you can lose is whatever you pay for the debit spread. We're gonna build a bull call spread, isn't it? The most you can lose is what you pay for the spread, and therefore your risk is limited even with no stops. And that way, you know, if McDonald's was to, I mean, let's say the market was to push down strong, McDonald's was to go all the way to this one and then come back up, well, you're back in business. Okay, you never got stopped out. You have never been taken out of the trade. Okay, so that's what we're gonna do. Okay, and again, this is ideal as well as you are running a portfolio with multiple positions where Starbucks may lose for you, but other trades are making money for you, or McDonald's may lose for you while Starbucks is making money for you. Is that making sense? So that's the idea. Okay, so yeah, very good. So let's go for it, guys. Okay, so option chain for McDonald's. Okay, so I'm gonna have to reload it. Okay, so reloading here, Option Station Pro. Good, so we need to look at McDonald's. And next question based on the rule that we have is which expiration date, and the expiration date will be set by the earnings reports and the TTT, correct? So McDonald's has earnings happening on the 25th of July. Okay, so 25th of July would have me use this particular expiration date, July 19. Okay, is the nearest one. Okay, so that's the expiration date I'm gonna be using for this trade. Now, normally now what I would do is to find out where my target is, calculate the TTT, okay, and make sure that July 19 that provides 50 days, okay, make sure those 50 days are more than the TTT. So if the time to target is gonna be 30 days and July 19 provides me 50 days, I'm giving myself extra time. I love it. But you don't want to give yourself little time. Is that making sense? So now what's the problem? The problem, same problem that we had with Starbucks, which is actually an opportunity. That stock is making all-time high. Therefore, there is no way for you to set a target because there is no red UFO. All right. So here, basically, we're gonna be using a trailing stop, and as new UFO forms, as this market go up, you will just keep trailing a virtual stop and use that as your target. And whenever McDonald's stops going up and starts going down and hits that virtual stop, then you would close the trade because that virtual stop would become your target. Okay. Since we don't have a target. Okay, so just to be a little visual, guys, okay, let's pretend McDonald's comes here and now starts moving up, okay, and then gives us a UFO and keeps going. So what do? Well, now below this UFO you have your virtual stop. If McDonald's falls and hits that line, you'll be out for a very tiny profit, okay, tiny profit of that size, okay, but you know what, that's trading. What if McDonald's keeps going? Okay, gives you another UFO. So what happens? You're gonna have a new location for that virtual stop. Okay, let's say McDonald's now comes back, reacts to the UFO, keeps going, and not only that, then gives you a new UFO. So what do? You move the line there. Let's say now McDonald's goes down and hits the virtual stop. So what do? that's your exit. Okay, and how much you made that. Okay, so you are basically exposing yourself for whatever profit is possible depending on whatever is going to happen. Remember, stocks are fragile, so we are very grateful to take whatever profits they give us. Okay, but we cannot be demanding, especially when a stock is making all-time high and there is no sell on field orders. Basically, you are depending on the new added orders and what the broad market will do. So in order to maximize the potential for profitability, that's how you would act. Okay, now to build the trade, you will normally do a bull call spread, but precisely because you don't know where the target is, you cannot build a bull call spread, because remember, the bull call spread is made of buying a call and selling a call. So you would sell a call above your target, right? And you would buy a call somewhere here. Okay, that would be the way on how you build a bull call spread. But again, since you don't know where the target is, well, then you're gonna have to just buy a call and be happy. That's the most you can do. There's nothing else you can do than buying a call, and it's not bad at all, actually. It's a great trade. It's just that with the bull call will be just a little cheaper. Okay, but you do have the opportunity to make more money because there are no UFOs. Okay, no red UFOs. So 193 is your entry point. Okay, when you look at the chain, there is no 193. Therefore, the trade to be taken here would be to buy the 195 call that expires in July 19, 2019. Okay, so July 19, 2019. Okay, so that will be the trade to be taken. Okay, you will be buying the 195 call that expires in July. Okay, but don't do it yet. Okay, you will need to wait. Okay, you will need to wait for that stock to come here. And by the way, you can automate that. Okay, so let's do it. I'm just gonna place an order to buy the 195 call. Right click and buy. Okay, buy a single call. Okay, it's giving me access to the order bar. Okay, so I'm gonna have to use market here now, and I'm gonna say, okay, activation rule: if the price of McDonald's is less or equal than 193, okay, buy the call. So that's called an activation rule. Okay, click OK. Now I'm gonna place order. McDonald's, we are buying to open the July 19 195 call if McDonald's is less or equal than 193. Okay, so you click yes, and the order is in the system. I haven't got filled, of course, because McDonald's didn't come to this blue line yet. But if it does, I will automatically get filled. Okay, so you have it. If I went a little too quick, you can always watch the recording right after the session is over, because you will still have time to place the order. Okay, what about MET? Okay, so we are looking at MET now. Day time frame for the trails? Yes, Lisa, good question. I would recommend you to do the day one, because since it's an all-time high type of opportunity, you would really want to try to maximize as much as possible the profit from the trade. If you were to trail your stop too close to price using a lower time frame, you are at risk of being taken out and then it goes your way. And again, we need to keep in mind stocks are fragile. Okay, so a little bit of a larger time frame, it's not like the higher time frames got stronger UFOs, but higher time frames got wider UFOs. And because the UFOs are wider, the distance to the stop is further away, and therefore it gives you a little bit more wiggle room for normal market fluctuations to happen based on what the S&P and the Nasdaq and the Dow Jones and the Russell indexes are doing before the stock, turns and picks up the direction itself, okay, as a consequence of all those reactions, okay? So with MET, okay, let's look at the 60-minute time frame. Yes, so dear, using in the money options is certainly a valid choice. You're just making the trade much more expensive, and as time passes, your gamma is not going to be as efficient, okay? So I told you that sometime in the future we will get into more advanced options training we will get to use the options analytics. I remember I kind of flashed it once that TradeStation has a search window here where you can run certain searches, you know, tell TradeStation, hey, I want to do bull call spreads, whatever. I want to do verticals. I want the verticals to be with call onlys, and I want it to be debit onlys. And I think the stock is gonna go up by 5%. Tell me what to do. You run the search, and TradeStation is gonna make some proposed combinations, and then we're gonna be looking at the Greeks, the delta, the gamma, but not only the delta, also the delta on the date when we get to the target. Okay, but not only the gamma, but also the gamma on the date. Okay. When we get to the target. Okay, that's what the close means here. Okay, close date. Okay, so all those assessments of the Greeks in different dates and stuff like that basically will have you pick one. Maybe it's this one. Okay, and that's the one you trade, and you will see how most of the times we're gonna be slightly out of the money to create a more efficient effect of gamma for our trades, and you will see it makes a major difference. Okay, but we'll have to cover that properly. Right now, I know you are very advanced with options, Dirk, so I'm giving you those little hints, and I know you know what I'm talking about. Okay, but we'll have a proper session, so we can cover this properly for everybody. Okay. Hey, Bojan. So you got me there, my friend. Okay, I mean, you know, I have to say I have a little special thing for the Spanish driver, right? And who that is, you know, so that would be Carlos Sainz at this moment in time. Okay, so very happy about the race he did last weekend in Monte Carlo. Okay, but anyway, let's go back to trading, guys, because you know, you can easily take my you know, my passion for trading. You can also easily plug it into my passion for Formula One. Okay, so don't do that, Bojan, please. Let's behave. Anyway, so MET. Okay, so looking at what we have here, we got 40% probability if we look at MET in the 60-minute time frame with pre-post market. Regular session is providing 54. So certainly MET seems a much better, seems to be a stock to be charted and analyzed using the regular trading hours. Okay, not the pre and post market. That's very clear. Yeah, Fernando Alonso is gone, unfortunately. FB he resigned last year. Okay, but anyway, so the problem I have when I'm looking at MET is that we are currently in the red and the green is all the way down at 44. If you look at the daily time frame, the green is located at 46. Okay. But really on the 60 is showing 44, and as you can see as well, I mean the algo is doing its job very well, because you can see those UFOs are not dark green like the one below, they are light green. Okay, and that's basically what you're saying, what you're seeing when you look at the lower time frame is telling you that, hey, you know what, the meat of the on-field orders is a little lower than that. Okay, so so you can see that. Okay, so I am actually more of a fan of the McDonald trade, okay, based on what we just saw, and therefore when it comes to long, I will not plan the trade on MET. Okay, so the last one I would like to check before we conclude the session is Target. Yeah, Brian and Senna is the legend, isn't it? So Target, again, we said that with Target, the thing about Target, okay, and by the way, you guys earlier had a question about some UFO that didn't show up on my side and show up on your side. Would you mind to retype it if that's okay? So I can look at it. I believe it was Target. So if not, it was MET. So I can double check before we conclude the session, guys. So with the 60-minute time frame of TGT Target, looking at the regular trading hours, 53%. Looking at the pre-post market, that is 56. So pre and post market is more relevant. And you can see we have UFOs located at 82. Again, good news, nothing to stop price from falling all the way to 72. Okay, and nothing to stop the price from falling until 69 without the pre-post market, and in the daily time frame, again, all the way to 70 something, right? So there is room for this market to fall. Okay. At the same time, again, looking at the S&P, Okay, looking at the S&P today, moving up. Let me see, 60-minute time frame. The S&P. So notice what happened in the S&P today. Okay, we had a red UFO, and what happened with that? It's gone. Okay, the app updates the plotting once per candle when the candle closes. Okay, so the app calculates the unfilled orders real time, but the plotting, okay, so it doesn't get too confusing, the plotting remains until the candle closes. Since this is a 60-minute time frame, it will take another 21 minutes before the candle closes. So when the candle closes, this red UFO will be gone, and we know that already because price is above. So what did I just say earlier about Starbucks, right? When price went above the red UFO, we concluded not only the sell on field orders were gone, but this normally is because buy on field orders have been added. Isn't it? So what am I saying here? Well, I'm saying that the S&P, even though in the current state is in a downtrend, that S&P seems to be showing signs of buy on field orders kicking in. So coming back to Target, my recommendation for you to have a very safe entry into Target would be not to enter the trade right now just because you have some red UFO there and plenty of room for the market to fall. I mean, if you were to do it, it would not be crazy. But to make it a little higher probability, my suggestion would be, okay, to wait for some red UFO to form, okay? And once the red UFO forms, then enter the trade, okay? Why? Because a UFO forming in Target, okay, would be a confirmation that that stock is going down no matter what the S&P is doing, okay? And if what we just saw on the S&P, where the red UFO is now gone, if that's gonna be the beginning of a new uptrend, well, then you don't want to short Target, okay? And if that's going to be the beginning of an uptrend, then Target will never produce that red UFO I would suggest to wait for, okay? So my recommendation here would be just put targets in your radar, and the moment you see something like that happening, and you have a new red UFO forming right there, you're going to be like, okay, even though the S&P tried to go up, Target is still adding more sell on field orders. And now you have sell on field orders, sell on field orders, sell on field orders, even in the pre and post market too. So, you know, now you have a much higher probability of this really moving down towards the 70 plus mark, okay? Anyway, so this, my friends, will be the session for today. Let me take a look at your last questions here. Orlando, Jose, with 61.8 calibration, I am getting a slightly different chart with no supply zones shown into MET daily chart. Okay, so MET daily chart. So 61.8, and you're telling me that you don't have that UFO. Orlando, could you please confirm that you don't have the 54 UFO? Dear, it was the target 60 minutes in the regular session. Okay, so 80 plus. So you are actually talking about you are talking about Medla. You are talking about Target, right, dear? Yes, Lisa. Look for a new red UFO on the 60 on Target, and then you have permission to go in, okay? Use it as a permission system for yourself. You give permission to take the trade only if the UFO shows up, okay? So that way you keep yourself on the safe side, okay? Good, so Orlando, when you have a second, okay, please confirm that that question concerning MedLife on the daily time frame. I'm gonna move to Target on the 60 minute to check on their question as well. So you have 8111. 8111, that one is showing up regular session. So what you're saying, Dirk, is that you don't have that 8111? Is that what you're saying? Okay, so I'll wait for your answer. And Bojan, you need to be generous, my friend. So since I share who is my the driver I support at this moment in time, even though I have a passion for the whole sport, would love to know which driver do you support. Okay, I would love to know that. So please be generous and share with us as well. Geneva, thanks. Great learning sessions and don't trade options right now. Not a problem, Geneva, because all those concepts. Okay, it's like everything in life. Sometimes you see, let's say you want to learn how to cook, and someone is just cooking that recipe, and you come in the kitchen and he's halfway into the cooking, and you don't fully understand, how the process of cooking that recipe was, right? But what happens, because you kind of seen some of it, next thing you know, one day someone is teaching you how to do the whole recipe, right? And what happens, you have a much better grasp of it because you have seen it before, even though the first time you saw it, it was confusing, okay? So the same thing happened with options. If you don't trade options, okay, I still recommend you to join us, to expose yourself to it. Maybe if it's less important to you, it's fine, but from time to time only, but still be exposed to it, because that way, whenever it's time for you, and we are doing the sharpening sessions and you are now learning how to do the options and all of this, it will click more easily for you. Okay, so just a little comment there. Okay, so now I have it too. Yeah, so I don't know, maybe there was a little glitch in my cache folder, and when I reloaded the chart, it forced TradeStation to re-download it, and that's it, okay? Got it, perfect. In any case, it's good that we double check all those things, guys, okay? Orlando, Jose, is the two red UFOs before the one you show on your chart? Okay, so what about you give me prices, Orlando? Because before can be above, below, right, left. So just give me the prices and tell me if you see them on your chart or you don't see them, because I'm still confused. I'm loading the chart so you can compare with mine, but I'm still not fully sure of what's happening on your side. So please clarify for me. Supply and demand trader, good to see you, my friend. Thanks, Jose. I appreciate your time and insights. I have my limit order for the MDT Iron Condor in place, waiting for it to get filled. Way to go. Supply and demand trader, you have an amazing 100% success record with the credit spreads so far. I know one will get stopped out, but your record so far is outstanding. Thank you so much. Again, the beauty of those trades is that by definition they are high probability, because we have so many tools working for us, isn't it? The scanner has done the job. The UFOs is the ultimate tool. Then we use the option strategy that also helps with the time decay. So you put all of these at work together and it gives you an edge, right? And that's why. But you have a good point as well, okay? Because trading means also knowing how to take losses when they happen, because they do, okay? So you never want to forget, here's a mistake that you may make. So please don't make this mistake. You may one day forget, hey, this is how losing was. Okay, why? Because now you got this collection of 5, 10, 15 trades that were all profitable in a row, and next thing you know, the day you get one loss, you forgot how that was, and next thing you know, you get over emotional about it, and now you start making mistakes just because of one loss out of 15. Okay, so we always need to remain, and this is the perfect mindset, supply and demand trader, always need to remain that anything could happen anytime, and it's all about probabilities and discipline, guys. That's it. It's very simple. Okay. Yeah, Ferrari fan since you were little. Yeah, I hear you, my friend. I totally hear you. Yeah, I've been a fan of Ferrari since many years ago as well, because at that time it was the only team that would make the car and the engine. So I was very supportive of that concept. So for many years, all the for sure Schumacher era, Jean Alesi, and many other drivers. But yeah, nowadays, I got Carlos Sainz there, so I'm biased. What can I do? Anyway, so Orlando, load MET daily. So MET daily. MET daily. Here we go. So 48.32, 47.4. So you have UFOs at that price in the daily time frame. That probably means that you have the settings hide hid UFO. You may have it as false. No, interesting. I could not understand how this could be. Okay, so maybe Orlando, if you could send a picture of your chart in an email or something, so I can look into this more in depth, because that's quite weird. Should be some sort of a setting or something. Okay, your chart is the daily time frame, right? And also, does your symbol looks like mine, MET, or do you have here a bracket B? Do you have a B letter here? Okay. Yeah. Anyway, guys, so we're concluding the session here. Yeah, we spent a little extra time here, but anyway, it's all good. It's a great company, loving to get together. Just be careful not to throw too much Formula One questions, okay? You know what happened. Anyway, using a little humor here. So, guys, we will see you next week. Remember, this weekend we are not running any sharpening session this weekend. Let me show you that. So tradewithufos.com, that's our website. Get together brings the calendar, and notice how we are going straight into June 4, which is going to be short-term trading. Okay, so this weekend we are taking a rest, as we do all months. So take it easy. Well deserved. If you are a little behind watching the recordings with the get-together, make sure you don't miss them. Okay, last weekend we did Forex. That was an important one. The prior one was calibration. So make sure you don't miss them, and use the downtime if you wish to catch up with recordings, if that's the case. Okay. See you around. We are here to help as well. So if you have questions in the meantime, certainly we'll be responding to you via email. So feel free at any time, for any purpose, for any question. No matter if you use the AutoUFOs app or you don't use the AutoUFOs app, send us questions, guys. We'll help you. This is teamwork. Okay, so let us know. Bye, everyone. Take care. Mario, thanks for that. Everybody, you guys take care. Bye.